Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 30th of March, 2025, and we're providing our regular weekly update for the week ending the 28th of March. A healthy rise for both gold and silver last week, peaking on Friday, and holding its own until the close. What's likely to happen this coming week? Well, let's take a look. Now, before we look at prices, we'd appreciate it if you'd give this video a thumbs up, and if you haven't done so, subscribe to the channel, and of course press the bell sign so that it boosts the algorithm so more people can see the video. Now, gold rose $62 last week, moving from $3,024 to $3,086. It did go as high as $3,093 and was at one stage as low as $3,003. Overall, a rise of 2%. Gold spread between high and low was an above-average increase of $90. Last week, we predicted gold would trade between $2,975 and $3,100, which is what happened. In sterling terms, it was up £45, closing at £2,391, and euros was up €49, closing at €2,851. Silver rose $1.11, rising from $33.10 to $34.21. Did rise as high as $34.64 and went as low as $32.92, a rise of 3.3%. The difference between its high and low was $1.72. Last week, we predicted silver would trade between $31.75 and $34.50, which is how it closed, but it did breach our high for a very short time by 14 cents. In sterling terms, it was up 86 pence, closing at £26.49, and in euros it closed at 31.58 euros. That's up 0.90 euros. The gold to silver ratio fell just over 1 point, from 91.4 to 1 to 90.2 to 1. Bitcoin currently stands at $82,600. That's down $1,800 on the week. US equities lower, not surprising. Dow Jones closed down 402 points at 41,583. The S&P 500 down 87 points at 5,580. And the Nasdaq Composite closed down 462 points at 17,322. Some commentators are stating that they believe the Trump administration is deliberately trying to tank the market, but that may be a conspiracy theory which we will neither agree to or deny. The FTSE index, though, the UK, was up 12 points at 8,658. Now, oils were higher too, unfortunately. Brent crude up $1.47 at 73.63, and WTI crude up $1.08 at $69.36. We had hoped that prices would be in the late 60s rather than pushing back into the 70s. The dollar index closed at 104.04, practically unchanged on the week. Now, last week, we advised looking out for Monday's flash PMIs, which showed stronger services but weaker manufacturing. The consumer confidence figures also showed a dramatic drop from 100 in February to just shy of 93 in March, but new home sales were up by 12,000. Quarter 4 GDP was revised upwards from 2.3% to 2.4%. Not bad, bearing in mind that in the UK, we've downgraded our 2025 GDP forecast from 1.7% to 1.4%. So if you think you've got it bad in the United States, we're not doing any better, and in fact, much worse in the United Kingdom. Now, Friday's PCE, or inflation figures, though, were quite crucial, as we stated last week. And we could see that year over year, the PCE rate remained unchanged at 2.5%, but the core rate rose from 2.7 to 2.8. Now, just a reminder, the core rate excludes or omits food and energy prices, which often jump up and down in the short run. So it is seen as a better predictor of future inflation. So one could argue that the PCA rate is a better indicator of current inflation for households and the core rate a better predictor for future inflation. We still have to be mindful that the Trump tariffs on cars and steel have not as yet really taken effect, and this could cause inflation to rise further in the short term. Now, this coming week, we have, out of the US, the final manufacturing PMIs on Tuesday. Then on Wednesday, the ADP employment report for March, with new jobs expected to rise from 77,000 to 120,000. We'll be a little surprised if that happens, to be honest. Thursday, we have the final services PMIs, and on Friday, the very important US employment report, with predictions for new jobs for March coming in at 140,000, compared with 151,000 in February. So, a fair amount of data with particular attention to be paid midweek and onwards. So why did gold prices rise to new all-time highs this past week? Well, a few reasons. Current inflation has stopped reducing and is slowly beginning to rise. Ask yourself, have US egg prices gone down yet? Traders rushing into safe haven assets over tariffs and inflation fears. Trump's tariff threats could add, in fact, 1% to inflation, stoking fears that drive gold demand even higher. It's also announced that 60% of CFOs, that's chief financial officers, now expect a US recession, up from just 7% previously, fueling gold's safe haven appeal. A potentially global trade war will do nothing for the world's economy except damage it, and the adverse effect on stocks are likely to be heavy. Geopolitics is still problematic, with no definitive resolutions to the Ukraine-Russia conflict and the Middle East tensions still not totally abating, though yesterday, Saturday, it was reported that Hamas has agreed to a Gaza ceasefire proposal it received 2 days ago from mediators Egypt and Qatar. The Palestinian militant group's chief said. We shall see if that happens. So, technical analysts are claiming that gold now has support just below $3,000 at 2,960 and very strong support at 2,812. Silver prices began to dip Friday but pulled back, and the $35 level is crucial. If this is broken to the upside, we could see $35.40 being the next achievable target. The $33.33 level is seen as support, with very strong support at $32.75. And the technical analysts undoubtedly believe that last Thursday's candlestick was extraordinarily bullish. We must not forget, however, that if the US does enter into a recession and the global economy is adversely affected as well, then there could be a price retraction for silver due to its large industrial demand component. We're not there yet, though, and so silver still has potential legs. With this in mind, we expect to see gold trade this coming week between $3,025 and $3,135. with $2,975 and $3,175 as outliers. Silver we expect to trade between $33 and $35, with $32.50 and $35.50 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you once again for listening. We really would appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. And all that remains is for us to wish you a prosperous week ahead and beware of equity prices. See you soon.